Thank you all for registering and turning up for this event today. My name is Joe Billsborough and I'm a research assistant at HEDG, which for those of you who don't know is the Historical Economics and Development Group based at the University of Southern Denmark. And this is the second HEDG Hosts event of this semester. I'm joined by two excellent researchers, my colleague Paul Sharp, who will be moderating and running the Q&A. But first, we'll be hearing from Bishnupriya Gupta, who is a professor of economics at the University of Warwick, the research director at HEDG, and her talk will be on community origins of industrialization in India. One small sort of logistical point, it makes it much easier for us if you put your questions in the Q&A rather than the chat, because then we're better able to keep track of them. But with all that said, the floor is yours, Bishnu.
Thank you very much for inviting me to this event. And thank you, Paul, for going through, monitoring the questions. So the title of my talk today is Community Origins of Industrialization in India, Evidence from the 19th Century. So what does it exactly mean? And as I go along, it'll become very clear in the next few minutes. When we think of industrialization from an agricultural society to early stages of industrialization, we think of a market economy that works. So there are property rights in place, there are mechanisms for technological diffusion, and the financial markets work. And this has been the experience of the Industrial Revolution in Britain, where the state did very little. It was mainly the private initiatives which led to early industrialization. In the second generation industrializing countries, some of these conditions were not present, and the prerequisites that were missing were then substituted by alternative institutions, such as the investment bank in Germany, the role of the state in the US in terms of bringing in tariffs, as well as in Germany and other countries where tariffs were introduced by the state. We had other examples as well, such as state emerging as an entrepreneur. There was a little bit of that in Russia and in several other countries in more recent times. And then in the 20th century, which is, we can think of this as the third generation industrializers, the state played a very important and decisive role. And amongst them, we can think of Japan and East Asia, where the states became developmental states rather than entrepreneurial states. So is there a third wave? What happens when these institutional settings are missing and the state is actually not that interested in promoting industrialization? And the context here is India before independence, so colonial India, where the market institutions were weak. And the colonial state was not supportive of industrialization. In fact, we have evidence that there was active interference from Lancashire to stop any kind of tariffs or any other help to domestic entrepreneurs. But despite this, there was a modern cotton textile industry that developed and competed against British goods in the Indian market and began to gain market share. By the 1930s, the Indian producers had a sizable market share. So the question I'm going to raise today is that how did this happen? And the channel I'm going to discuss is the community network channel. And here what I mean is that there are a group of people who become entrepreneurs, but they belong to the same community and they help each other out. They exchange information, they exchange know-how, they share capital, and then they help in overcoming problems of moral hazard through informal community enforcement mechanisms. Now, why do we think this is an important aspect? When we think of early trade, particularly medieval trade, There is work by Avner Greif who talks about the Maghrebi traders as being a community which supported this long distance trade by overcoming very similar problems. In present day context, we also have caste networks in India playing an important role in credit and insurance markets. There is evidence from Africa and China on the community networks playing an important role in international trade. And also in the context of labor markets, there is work showing migration is helped by community networks. Hiring and referrals are helped by community networks. So this is an aspect which has not been discussed much in the context of industrialization. And this is what I'm going to emphasize today, that there is a third way through which industries can develop. And I'll show you that in the Indian context, industries did develop despite an lack of state support or institutional support. And this is through the role the community networks play. And I'll tell you a little bit about who the what I exactly mean by community networks later on, but let me just say now that in the Indian context, these are caste networks, these are religious networks of religion. So they could be Muslim traders, they could be Parsi traders, and so on, and you'll see as we go along. So just by way of background, a modern industrial sector developed in India from the late 19th centuries, from the middle of the 19th century. There was a very large amount of British investment in the railways and commerce in particular, but there was some investment in industry as well. But when we look at the data on British capital flows that went to the empire, this was only a quarter of the total British capital flows, of which only 1/3 went to the dependent colonies, that is, colonies which were not self-governed. And India had 2/3 of this share. So it seems a large part of this capital, but it is actually a small share of total British investment in the empire. And this investment went primarily to the railways and other commercial activities. At the same time, in the 19th century, there was Indian investment too in modern industry. And this investment existed side by side with the traditional textile industry and other traditional industries. And I'll show you some data on the size of the two sectors. So how can we think of these two segments of industrial investment? One was investment by the British investors, and the other was Indian investment. I will show you that two industrial clusters emerged, and these were in two different parts of the countries. One was in the east, and this is tea, jute, and coal industries around Calcutta. You can see that here in this map. And the hinterland. So this is the tea producing region. This is the jute processing region. So all this investment in this industrial hub was British, mainly done by the British. But there was a different sector on the other side of the country, which is in the region of Bombay city and the hinterland, where Indian industry was important. This was mainly in cotton textiles. This was the second largest sector of industrial investment after tea. And here, more than 80% of the investment came from Indian entrepreneurs. So is this surprising? That's a question I'm going to take up in a couple of minutes. Just want to, before I do that, I want to show you the share of investment in industry. This is the tea industry. You have two bars here, one blue and one orange. The blue bar is the investment in sterling companies. These are companies set up in London. And the orange bar is investment in rupee companies, which are companies set up in India. A rupee company doesn't mean that these are all Indian investment. Many British expatriates in India and army officials and civil servants also invested in rupee companies. You can see that after tea, cotton was a main sector. Here, the investment is slightly different in terms of rupee investment being much more important than sterling investment. And then you have the third important sector, which is jute. Jute was used as an industrial good for making gunny bags and sacks for wars and transporting goods from one part of the country to other countries or other parts of the country. And you can see that the total amount of sterling and rupee investment were roughly similar. Now I'm going to show you a breakdown of rupee investment by different sectors. You can see in 1951 to 65, banking and insurance and mining and plantations were the main sectors. But by 1900, the textile industry had emerged as the main sector of main industrial sector. And here it includes both cotton textiles and jute textiles. So what did India look like at independence in 1947? It was a colonial economy which was linked to Britain, which, mainly an exporter of food and raw material. It was one of the poorest countries in the world. 10% of India's workforce was in industry producing 12% of GDP. So this is actually quite a small share of total industry. So can we think of Indian industrialization as a failure or an outcome of this discrimination that was done in terms of the British policy in India? So the nationalist view has been that colonial policy hindered industrial development and discriminated in favor of British businesses. A recent book, there's a large literature on this, but there's a recent book by Shashi Tharoor called The Inglorious Empire, where he highlighted this view that without the British coming to India, India might have been a big industrial power. So that's the discrimination story. We can now come to the failure story, which comes from Max Weber. Max Weber talked about Hinduism as something which did not produce the entrepreneurial spirit. And therefore, you could not expect Indian entrepreneurs to invest in industry. And this is where British capital filled the gap. And therefore, there was a kind of positive effect of British rule in India. And the failure story is really on the part of the Indian entrepreneurs. There is some critique of this by Morris David Morris, who argued that you can think of the Indian industrial sectors as the Rashomon effect, borrowing from the film by Kurosawa, that the same incident is viewed very differently by different people. And Morris argued that depending on a particular industry, its profitability was assessed very differently by different social groups in India. So the British liked some industries and the Indian liked some other industries. And therefore, it was definitely the case that there was some ground for Indian investment. So industry in colonial India, when we actually look at the data, was the fastest growing sector. It has the fastest productivity growth. And here's the table here. You can see that compared to agriculture and services, output per worker grew much faster in industry. It was this productivity growth was driven by the investment in large modern industries, so large-scale modern industry. And we need to compare this large-scale industry with the small-scale traditional industries, which were already there at the beginning of the 20th century. So this graph shows you in yellow, the large-scale industrial investment, and in gray, the small scale traditional industrial investment. And you can see from this graph that the large scale sector was really quite small at the beginning of the 20th century. But by 1950, they were roughly the same. So the yellow bar was growing at a very fast rate during the colonial rule. In comparison to other colonies which emerged from colonization in 1945, India's share of manufacturing in total GDP was not very different from that of South Korea or Taiwan. And here is a graph of GDP per capita of India in red in comparison with these other countries. And they don't look that different during the first half of the 20th century. So let me now come to the role of community networks. Why do we think that this would be an important factor in industrial investment? So if we go back to Morris's argument of the Rashomon effect, information played an important role in entrepreneurship and in investment. So the knowledge of the markets was critical in determining who would invest in which sector. So the British entrepreneurs had a knowledge of the export markets, and this is where they invested. That is in tea and jute, both for export goods. The Indians did not venture in this direction very much until much later. Whereas the import substituting industry, which was the cotton textile industry, was mainly an area where the Indian entrepreneurs had an advantage. They knew the local markets, they had sold British goods in the local markets, and this is where they invested. So the community network of Indian merchants who had been involved in trade in cotton textile and other products had accumulated a lot of wealth, and now this wealth was channeled to the cotton textile industry. So the way I think of the role of community networks as this is a world where information flowed within the community networks. So even the British entrepreneurs, you can think of them as a specific community in the Indian context. They lived in the same neighborhoods, they went to the same social clubs, and they operated as a social networks. But other than the British interest, there were several Indian interest groups, Indian social networks defined by caste or religion, who had a very similar structure. Information flowed within these community networks, and therefore conditional on the initial information advantage, the network effect segregated in industrial investment into different activities. So if, for example, an Indian entrepreneur entered into the cotton textile industry, other members of the community would follow this person because they had information through the network, whereas they were very unlikely to go into the tea industry where they had very little information and advantage. So, and the last point I want to make is the community networks also played an important role in raising capital from members of the community. So you could well ask that, was there a stock market or not? And I'm going to show you in a minute that there was a stock market, but even there, the community network was important. So this is what the structure of the industrial sector looked like. In tea industry, the entrepreneurs were British, the investors were British, and this was in the East. In jute, it was a similar story. In coal, again, it was a similar story. All these were kind of catered to the export sector, or in the case of coal, to the railways. In the cotton textile industry, the entrepreneurs were mainly Indian, the investors were also Indian, and it was in a different part of the country. So the world of industrial investment was extremely segregated during the colonial period. So we can say that there is little support for Weber's view that entrepreneurship was lacking. There is also little support of the nationalist view that colonial policy prevented Indian participation. Tea emerged as the largest sector where there was marginal presence of Indians. Cotton textiles, on the other hand, was dominated by Indian investment and in particular rupee investment. So I want to now move to a particular case study, which is on the cotton textile industry. And this is based on my work with Dilip Mukherjee, Kaiwan Munshi, and Mario Sanclemente. And the question we raised is that how did a cotton textile industry develop with Indian entrepreneurship? How did it develop as an import substituting activity when the colonial state was not supportive of industrialization? Tariffs were not introduced in India at all as a protective measure. So there was a 5% tariff on British imports of textiles, but there was a countervailing 5% excise on Indian production of textiles in order to placate Lancashire, because Lancashire objected to any form of protection of the Indian textile industry. So during the period 1950 to 1910, in Western India, the industry developed in two regions. First in Greater Bombay, which you see on the map here. This is the first phase of the development from 1850 to 1880. And then you have the second phase of the development after 1880 in Greater Ahmedabad, which is also in Western India. When we look at the location of cotton mills in India in 1888, you can see most of this was in Western India in the province of Bombay Presidency. Most of the firms were located in Bombay City, and the rest were in other parts of the Bombay Presidency. And every other region had one or two firms, but not more than that. So how did the industry actually emerge? There were two factors here. One was the American Civil War of 1861 to 65, when India became the main exporter of raw cotton, and that there was a big increase in the price of raw cotton. The export revenues led to an accumulation of wealth in the hands of the Indian traders. When the Civil War ended, this particular sector was no longer as profitable. So the traders began to look for alternative opportunities of investment. So one of the obvious diversification was to move into production of cotton textiles. So if we think of the cotton trade as the upstream of this industry, the cotton textile production was the downstream of this industry. So so let's think of the community as a source of capital. At this time, the banks did not provide long-term capital. They only provided short-term capital for trade. There was no formal stock exchange until 1875, but even when the stock exchange was set up, the community connections were the main mechanism through which stocks were sold to investors. The capital market remained highly segmented despite the presence of the stock exchange. In terms of contract enforcement, the institutions were very weak in India at this time. There was no civil code for contract enforcement until 1872. Even after legislation was introduced, traders and industrial interests relied on the community enforcement mechanisms. So formal legal institutions were less important in setting up this industry. So anybody who wanted to become an investor in a cotton textile industry turned to the community for raising more capital. The free trade principles of the British Empire affected the development of the cotton textile industry. As I've mentioned, there was a tariff, but there was a countervailing excise on Indian products. So who were the prominent trading communities? These were communities defined by caste and religion, and I think of them as a very close-knit but inward-looking community. They married within the community. They rarely had social interactions with other communities. So these communities were the Parsis. This is a group of Persians who migrated from Iran in the 7th century. There were the Bhatiyas. This is a small caste of Hindus who were extremely entrepreneurial. The Khoja Muslims, a subcaste of a subgroup of the Muslim community, and the Jews from Baghdad who had migrated around the 11th century. And amongst the Hindus, there were the Vanya communities of Hindus and Jains. We are going to treat them as one community because they intermarried and they shared many similar customs. How did they make money? So what were the pre-industrial activities in which they were engaged? These groups acted as agents of the East India Company and therefore earned a lot of money from brokerage with the East India Company. Some of them were engaged in Indian Ocean trade, and some of them were involved in opium trade with China. So all the wealth was made mainly in trade in different commodities. In the 19th century, raw cotton became one of the main sources of profits for all these communities. There were also some of the communities were engaged in banking and money lending. But there is little evidence that any one community had privileged access to banks or specifically were favored by the British. So the Weberian argument that the Parsis were entrepreneurial because of their high education does not seem to hold in the context of the cotton textile industry. So how are we going to think of identifying the community effect? So what we use in this paper is firm level information on directors and partners from business directories. And this is what the business directories look like. There is a Times of India directory and there's a Packers of India directory. And then we hone in on individual firms. And you can see this firm is a spinning and weaving company located in Bombay city. It gives the names of all the directors, and just by looking at the names, I can say that most of them were Parsis. And there is this manager here who was British. So in our framework, this firm would be classified as a Parsi firm. And then we go through every firm in the industry and classify them accordingly. So we create two data sets. One is by entrepreneurs. So we know all the entrepreneurs in the industry at this time. We look at their names and we match them to a community. And then we classify firms by community by the majority of directors or partners. What we find is at the point of entry, each entrepreneur tended to enter a firm which belonged to the community. So you can see at the point of entry, most of the members of a community would enter a firm which is classified as belonging to that community. And this is true for almost all the period. In fact, it actually becomes much more important over time. When we look at the entry patterns, this is all the entrepreneurs, how they observed at the point of entry. This is the Civil War years. And you can see that there's a strong growth in the number of entrants between 1860 and 1890. When we split them by communities, we see a quite distinctive pattern. The community entry seems to follow a pattern of sudden increases. So there is some entrepreneurs entering, then a lot of them enter at the same time. And you see this by in every community over this period. So we think that entry takes place to the firm that belongs to a community, but it also takes place at the same time as the entry of other members of the community. When we extend the period from the initial phase after 1890, we see that the industry actually moved to an alternative location, which is Ahmedabad region, which I showed you in the map before, also in Western India. And in this new location, new communities dominated the industry. So the group that emerged as the main group of entrepreneurs in Ahmedabad were Hindu and Jain Vanyas. So every region has a different community which became the main investor in this industry in that region. So this is Greater Bombay. You can see the big spurt in growth in the Parsi community. You can see the big spurt in the Hindu and Jain Vanyas after 1890, and you can see other communities also entering in a similar pattern. And this is the region of Ahmedabad where there is very little entry in the beginning, but there is a sudden spurt in entry after 1890. When we look at the firms in this extended period, we've observed the same pattern. The entry at the point of entry, an entrepreneur is more likely to select a firm that belongs to the same community, which means that they bring their own capital to a firm where they know the other members and they come from the same community. And you can see this pattern gets much stronger over time. If you think that the cotton textile industry is just one example, and this is not a general pattern, I can point you to the other example, which is the jute industry. Now, if you remember, I mentioned earlier on that this is an industry where the British dominated. But things began to change after the First World War. Until the First World War, the industry was completely dominated by British entrepreneurs. After the First World War, the Indian traders in jute, so these were traders who traded in bringing the raw material of raw jute to the industry. These traders began to invest in the textile industry, the jute textile industry. So, and you see the same pattern of communities becoming strong players in this particular industry. And here the community is that of Marwari traders who began to enter after the First World War in a major way. And so exactly the same pattern. And this is the one group which became the dominant Indian entrepreneurship community in the jute industry in the east of the country. And again, there is a similar pattern of concentration of community within a particular firm. So I think there is a lot of evidence that at the early stage of industrialization, when the institutions were absent or lacking, and support from the state was also lacking, entrepreneurs from different trading communities and social networks were crucial in raising capital for investment in industry. And therefore, we can think of community origins of industrialization in the Indian context. Different communities were present in different locations, but the pattern of entry was very similar across all locations. So we can say that Weber's thesis that Western education and entrepreneurial spirit were necessary for industrialization and was lacking in India does not stand to scrutiny. Nor does the nationalist critique that the colonial state prevented entry of Indian entrepreneurs. And there are these very strong community origins of early industrialization in colonial India. Okay, I'm going to stop there.
Thank you so much, Bishnu. That was really, really fascinating.